Crazy semiconductor investment in China. Do you have a semiconductor project? Wang Feifei feels helpless. An investment company in Shenzhen where she works focuses on hard technology, accounting for about 20%. Now she often meets former colleagues who would like to consult on semiconductor. As far as she knows, organizations that did not look at semiconductors seem to have turned to semiconductors overnight. Those who invest in mobile internet, big consumers, and various FA institutions are all looking at semiconductors. In 2020, Qian Saiyuan, an investor who pays attention to the semiconductor field, is also confused. Semiconductor is a niche, high threshold, and relatively mature industry chain. There should not be so many people paying attention. But in fact, no one will not talk about it. Semiconductor. The U.S. sanctions against ZTE in 2018 revealed the current status of the domestic chip and semiconductor industries. At a conference that year, 20 industry leaders reflected on why VCs did not invest in semiconductors. Everyone mentioned the problems of high barriers to entry, long cycles, and low returns in this industry, just like soap bar. By 2020, external pressures are still not optimistic. Companies such as Huawei and SMIC are included in the list of entities of U.S., meaning that they are officially banned by U.S. Domestic substitution and independent control are becoming more and more urgent. However, the domestic semiconductor investment situation is completely different, and capital is chasing semiconductors. Speed is most valuable in military affairs. Be quick. This is the consensus of a Beijing-based VC institution that invests in technology. The ordinary investment project cycle is about 2 months, the chip is 2 weeks, and the high-quality investment target only takes 10 days at the fastest. At the end of 2020, senior chip engineer Wu Jie also changed his career to become an investment manager. Capital's pursuit of chips was unimaginable in the past. Yang Lei, a partner of Northern Light Venture Capital, once used an analogy in 2020. Looking back at the development of the entire chip investment, he has experienced the process of big dining table, small dining table conference hall. From 10 institutions at first to a few remaining in the middle of a period of time, until now almost all institutions are investing in chips. According to the data from Tianyan Check, as of the end of 2020, 21,000 companies in China have expanded their semiconductor business and added 68,000 companies related to integrated circuits. Do not rule out overlap between the two. This means that the number of companies doing semiconductor projects has increased a lot, and the plates have become increasingly bigger. But high-quality projects still need to be grabbed. An FA of Yunhuish Capital said since 2020, its chip investment has been swift and expensive. Some projects have not been approved yet, they are just preliminary contacts, and friends have already invested. Even if you keep up with the project, it is common to be robbed. The investment institution has negotiated the project and is about to sign an agreement. Suddenly a new institution has come in. The company's valuation will soon be doubled as a result. An investor named directly that in December 2020, an investment institution followed a 2-month project and talked about investing at a valuation of $1 billion. As a result, the leading investment institution went up to a 50% premium and snatched it away. The valuation of companies targeted by the head will soar all the way, and investment institutions will also swarm in. Take Hubble Investment as an example. Some of their lead investment projects have co-invested more than 10. Hubble is an investment company established by Huawei in April 2019. It mainly serves Huawei's supply chain domestic substitution strategy and strategic reserves for the future. According to data from 02 IPO, Hubble invested in 5 projects in 2019 and 10 projects in 2020, 11 of which are semiconductors and electronic equipment. Some institutions have no semiconductor investment experience, and the strategy adopted is to follow the investment of the head institution. This is called copy job in the industry. Guakahia and investment director Qian Saiyuan said that institutions will keep an eye on head movements. Once news of the change in Industry and Commerce Administration comes out, this invested company will welcome a large number of investment institutions. Everyone would ask the investment institution where the investment company is good, or get information about the invested company, or rely on past institutional ties to find someone. In less than 10 minutes, the invested company may receive calls from the next batch of investors, and there is no time gap, which is no exaggeration. Information may also flow out in advance. Some projects are still being voted for. Everyone in the industry knows it, and individuals and institutions will come to follow up. For investment institutions, the longer it takes to make decisions, the higher the risk of being robbed. Everyone will shorten the decision-making time again and again. Some investors who specialize in semiconductors told us to look at products, customers, technical barriers, and then look at the origin and valuation of the founders. Popular projects in the industry may look at general directions and small details. Just let it go, not tangled. Other investors revealed that some institutions even gave up detailed due diligence in order to grab projects. Due diligence. This was once a key link for investment institutions to control risks. Investment managers will go to the scene to conduct investigations and verifications from finance to business. But now, even if some organizations want to do it, they will sign an agreement directly if time is too late. Valuation is rising. One of the most obvious feelings of Lu Ming, an institutional investor in the optical communications industry, is that in 2016, when he went to talk about semiconductor projects, he could suppress the company's valuation and allow the other party to accept the terms of gambling repurchase. He told us that in 2020, many institutions have also abandoned the repurchase clause, and the company's valuation is getting higher and higher. 5 years ago, Lu Ming took over a B-round semiconductor company with a valuation of no more than 300 million yuan. Today, the valuation of similar companies in the B-round and similar companies is close to 1 billion, which has tripled. Lu Ming roughly estimated that the investment amount of a single project in the industry rose by at least 50%. A chip engineer intuitively felt that financing of 1 to 2 billion in the past was a major event, but now it is valued at tens of billions, and a single investment can reach 1 billion. At the forum in 2018, Zhu Xiaohu, a well-known investor, mentioned that chip companies have invested heavily in the early stage and their valuations are often too low. Unlike Tencent and Ali, which can be valued at 4 to 500 billion US dollars, the most successful chip may be $1 billion to $2 billion. For VCs, this investment and return are disproportionate. This perception is now broken. The Sci-Tech Innovation Board brought about the enthusiasm for the secondary market of semiconductors and hard technology. At present, the top 10 semiconductor companies in the market value of the Sci-Tech Innovation Board accounted for half of the country, and these sentiments were further transmitted to the primary market. The valuation ceiling of chip companies has been infinitely raised. From the initial focus on semiconductor applications, design, manufacturing, packaging and testing in the middle and lower reaches of the capital, to the upstream semiconductor materials, production equipment, EDA, electronic design automation, and other links, the focus is more diversified. What followed was an influx of funds. According to 02 IPO data, there were 695 investments in semiconductors and electronic equipment in the first 3 quarters of 2020, a year-on-year increase of 23.2%. The investment amount was approximately 108.351 billion yuan, a year-on-year increase of 280%. An industry insider told us, there is too much money in the industry. The National Team Fund is the largest in the industry. In July 2020, the second phase of the National Integrated Circuit Industry Investment Fund and the second phase of the Shanghai Integrated Circuit Industry Investment Fund, Phase 2, injected $1.5 billion and 750 million into SMIC, for a total of $2.25 billion. These are one of the investments among several large deals in the industry. At the same time, industrial investment institutions backed by technology companies have also entered the market. The most typical is Huawei's Hubble. Relying on industrial connections, resources and orders, they can obtain financing at a lower price and are also favored by the company. Take Lu Ming's investment institution as an example. The chip company that has been handed in will open a special round for them. If a pure financial institution wants to follow up with the investment, it must at least double it. They invested in a company with a valuation of 700 million yuan. In less than half a year, others wanted to triple the valuation. Capital crowded with valuation growth. Some investors told us, some good projects are valued at 10 billion yuan, but many top institutions are going to grab them. More top hot projects are valued too high, which has made it difficult for small investment institutions to expect. Cast the next Cambrian. The launch of the Science and Technology Innovation Board in July 2019 accelerated the capitalization of chip and semiconductor projects, and the investment in the industry became more intense. The secondary market sentiment continued to rise, reaching a wave of highs in June 2020. In July, chip giant SMIC, the first AI chip stock, Cambrian, successively landed on the SciTech Innovation Board. According to the statistics, as of the end of 2020, 18 semiconductor companies have completed the listing on the SciTech Innovation Board, with a fundraising amount of more than 80 billion yuan. SMIC has completed the largest fundraising of 53.2 billion on the SciTech Innovation Board, of which the 12 of the company's first day of listing rose more than 200%. Wind data shows that, except for very Silicon shares and Shanghai Silicon Industry, which have suffered substantial losses, the average price-earnings ratio of the remaining 16 companies exceeds 100 times, which is obviously at a relatively high level. According to the research report of CITIC Securities in September 2020, within the scope of its selected target, the average valuation of a share market semiconductor companies in the past 4 years was 70 times PE of the year, and the average value of U.S. semiconductor companies was about 20 times. The already listed SMIC and Cambrian are regarded as benchmarks. The Cambrian, founded in 2016, has always been a star project on the AI chip track. Its valuation has increased by 45 times in 3 years, and investment institutions are vying to invest in it. In the first 3 financings of the Cambrian, Jinye Investment continued to invest, with a total investment of 19.3 million yuan, and held 1.59% of the shares of the Cambrian before the listing. After the Cambrian was listed, based on the issue price of 64 yuan per share, Jinye Investment's book return rate has reached 19.07 times. As of January 6, 2021, the Cambrian had closed at 150 yuan and 10 fen per share. According to this calculation, Jinye Investment's book floating profit was 857 million yuan, and the book return rate exceeded 40 times. Such excess returns are extremely attractive. For investment institutions, even if they do not aim for the next Cambrian, they can invest in mature projects in the middle and late stages, even if they do not aim at the next Cambrian, and they can exit on a punctual basis after listing, and it is not bad to eat a wave of price differences between the primary and secondary markets. The madness of the secondary market stimulates the primary market directly. Qian Saiyuan said that in the past, when people looked at chip companies, they depended on PE and PS. There was a basic valuation standard. But this year, the valuation standards are blurred. Many investors have told us that as long as there are large customers, it is a popular direction, and the valuation depends entirely on belief. I think this company has a possibility of 50 billion, or 100 billion. In this case, when you are still in doubts in the story, others have already signed the agreement. Guke Jiahe, where Qian Saiyuan is located, is a professional investment institution focusing on the field of hard technology, focusing on semiconductors, chips and other racetracks for a long time. He told Leopard Change that many new projects have emerged in this industry in recent years, but due to the high barriers to entry in this field and the mature industry chain, he pays more attention to the industry's old guns and time-honored brands than young companies. A team that has both technical barriers and business capabilities. In the eyes of professional investors, when people without professional technical background suddenly start a business, there is basically no possibility of success. Even if scientists start a business to make semiconductors, it is not reliable. Mass production of chips requires strong craftsmanship. There may be a problem if one welding or one material is wrong. This risk is difficult to bear. After all, one tape-out is tens of millions. Even if the talents are good enough, if there are no products in the subdivisions, no profit can be achieved. The current listing standards have shrunk significantly. Wang Feifei said that everyone is trying to set in the minimum standards for listing, such as the market value of 1 billion yuan, the basic corresponding revenue and profit. Bubble wrap. Around 2005, investment institutions represented by IDG and Northern Light Venture Capital began to pay attention to the hard technology field. Compared with the internet, big consumption, etc., this is a very niche segmented field. For 10 years, chip ventures has been silent. In May 2019, Huawei was included in the list of prohibited entities. 1 year later, sanctions increased, and China urgently needed to solve the stranglehold problems. During the technological Cold War, the chip wafer capacity gap caused by the epidemic requires more replacements, which has spawned the chip entrepreneurship fever. Wu Jie described, foreign companies follow Daniu bull market to start businesses. Taiwanese manufacturers come to the mainland to make semiconductors, and a group of domestic people who master core technologies are showing their fists. At the same time, the Sci-Tech Innovation Board opened up, opening the door for domestic technology companies to go public and also for capital to take the retreat. With various factors superimposed, domestic chips that have been behind for 10 years are beginning to catch up. On the frenzy, bubbles are the most talked about. Compared with the financing dilemma a few years ago, after the big road of the Science and Technology Innovation Board was opened, general companies can basically not worry about financing. A chip verification engineer who has been in business for 15 years told us that his former company was using this routine, packaging PPT, and seeking financing under the slogan of building China's chips. Some investment managers complained that unprofessional institutions only look at the team's academic qualifications and background. They look luxurious, the school is good, and it is another imaginative direction, so they invested. There are even investment institutions lending money to the founders, who use the borrowed funds to repurchase the shares held by other shareholders, and then conduct another round of capital increase and share expansion. A number of chip companies have reached a highlight moment when they are listed. At the same time, Chengdu, Nanjing, Wuhan, Shaanxi, and Hebei have successively exposed lightning incidents. An investment manager revealed that some local governments look for projects, just like to complete KPIs. They don't look at projects at all. Shangfeng Cement announced that it will invest 550 million yuan to enter the semiconductor and chip industries. Arowana and Halen's Home have all had scandals with chips. This also makes this chip great leap forward, with many more confusing bubbles. Some people in the industry worry that the excessively high price-to-earnings ratio has also overdrawn the growth space of companies. Qian Saiyuan believes that to a certain extent, beer is not good to drink without bubbles. Projects incubated through capital will experience the bubble stage, and the projects, technologies, and talents that are ultimately left are the most precious. Many investment managers judged that this boom would continue for 6 months to 1 year. The completion of domestic substitution of some mainstream equipment is still very low, and the core components have not been kept up. Semiconductors are the cornerstone of the information industry. The external environment shows no signs of easing. In December, SMIC was included in the sanctions list by the United States. In order to quickly develop its internal strength, apart from money, policies, talents, and markets are also indispensable. The factors are superimposed and linked, and a breakthrough can be achieved after a certain period of accumulation. As for capital, although they are passionate about the semiconductor industry today, they still need more patience. At the request of the interviewee, Wu Jie, Wang Feifei and Lu Ming are pseudonyms.